Money. We use it every single day, right? But have you ever really, truly stopped to think about what it is? Because it's not just some paper or numbers on a screen. The story of money is actually this incredible story of human innovation, and maybe surprisingly, it's a story all about trust. So let's get right into it. To really get this, we have to go way back to a time before money even existed. So picture this, you're hungry, you really want a pizza, but you've got no cash, no credit card, nothing. How do you get that pizza? Well, you'd have to trade something you own, right? Maybe a cool t-shirt, a book? This is exactly where our story starts. You know, this system of just trading stuff directly has a name. It's called bartering. It is the oldest form of commerce there is. It's super simple. You have some grain, I have some fish, we swap. And look, for really small, tight-knit communities, this actually worked. For a while. But here's the huge problem. What if the pizza guy doesn't want your t-shirt? This is the perfect illustration of why bartering is so tough. It requires what economists call a double coincidence of wants, which is really just a fancy way of saying I have to want exactly what you have at the same time that you want exactly what I have. I mean, what are the odds of that happening all the time? Pretty slim. So you can see where this is going. As villages started growing into towns and towns into big cities, the barter system just completely fell apart. It was way too inefficient. Could you imagine trying to build a whole house just by trading chickens for everything? No way. Society needed a better system. It needed a serious upgrade. The solution then was to find something, anything, that everybody could just agree had value, something that could be like a middleman for any trade. And that, right there, was the birth of what we call commodity money. Things like rare cowrie shells, or useful blocks of salt, or even chunks of metal. They became the first forms of money, all because people trusted they were valuable. This idea is so fundamental, it's actually baked right into our language. Get this. In ancient Rome, salt was so important that Roman soldiers were actually paid in it. Their payment was called a salarium. And yep, that's exactly where we get our modern word salary. You are literally working for salt. Now, as cool as getting paid in salt sounds, it's not super practical, right? I mean, it can get wet, it's a pain to carry around. So over time, people naturally started moving toward metals, especially gold and silver. And why? Well, they don't rust, you can easily break them down into smaller pieces, and pretty much everyone on Earth agrees they're valuable. So at first, people were just trading these raw chunks of metal, which, had to be weighed and tested every single time. A real hassle. But then, around 600 BC, the Kingdom of Lydia had this game-changing idea. They created the world's first standardized coins. By stamping the metal with a seal, they guaranteed its weight and its value. And just like that, trade became so much easier. But of course, this created a whole new problem. As trade routes got longer and stretched across continents, merchants couldn't be lugging these giant heavy bags of gold everywhere. It was super inconvenient, and it basically put a giant target on their backs for robbers. So once again, humanity needed a new idea. And the solution that came next was just, well, it was deceptively simple. It wasn't some stronger metal or a fancier coin. It was a light, easy to carry, simple piece of paper. And this was an absolutely revolutionary leap forward. The whole idea actually started with merchants back in 7th century China. They'd leave their heavy coins with someone they trusted, and in return, they'd get a paper receipt, a promise that they could get their metal back whenever they wanted. Pretty soon, people started trading those receipts directly, and eventually, governments got on and started issuing their own official paper money. Okay, so this is the most important part of the whole story. That piece of paper, by itself, has zero value. It's just paper. The only reason it works is because of a shared belief, a collective leap of faith. People trusted the promise that the paper represented, the promise that it could be exchanged for something of actual value. For a long, long time, that promise was directly tied to a physical thing. Under what was called the gold standard, a government basically promised you could walk in and trade your paper money for a fixed amount of actual gold. But today, most of the world uses something called fiat money. Its value isn't backed by gold at all, it's backed only by our trust and faith in the government that issues it. And this huge shift really didn't happen all that long ago. It was in 1971 that the US officially cut the link between the dollar and gold. That was a massive moment that basically untied the entire world's financial system from a physical thing and moved it almost completely into the realm of pure trust. And from there, things just got more and more abstract. We moved to credit cards, then to online banking, and now we're all using mobile payments. I mean, think about it. How often do you even touch physical cash anymore? For most of us, most of the time, money isn't paper or coins. It's just digital data, ones and zeros zipping around the planet in an instant. And then, right in the middle of a huge global financial crisis in 2008, a brand new chapter in our story began. Bitcoin showed up on the scene, the first cryptocurrency. It proposed a totally new kind of money, one that was purely digital and didn't rely on trust in governments or banks, but instead trust in mathematics and cryptographic code. And that, right there, is really the key takeaway from all of this. When you look back at this incredible journey, from trading shells to metal coins to paper notes to digital bits on a screen, you realize the technology always changes, but the foundation is always the same. It's about what we, as a society, collectively agree to trust. So, from the simple, direct trust of a barter trade to the complex, decentralized trust of the blockchain, our very definition of what's trustworthy is constantly evolving. And that leaves us with a really fascinating question to think about. As our world keeps changing, what will be the next thing that we all agree to trust as money?